Stocks extend gains as trade tensions continue to ease. Stocks in Asia traded higher on Monday afternoon after U.S. President Donald Trump's announcement last week that tariffs would not be slapped on Mexican goods. Mainland Chinese stocks were higher by the afternoon, with the Shanghai Composite Index gained nearly 1%. In Hong Kong, the Hang Seng Index surged 2.03% as shares of Chinese tech giant Tencent soared 2.91%. Official Chinese trade data for May showed the country's exports beating forecasts and imports falling short of expectations, leaving it with an overall trade surplus of $41.65 billion for the month. May exports in China rose 1.1% as compared to a year earlier against expectations of a 3.8% decline. Imports, who were also expected to fall 3.8%, dropped 8.5% instead. Japan's Nikkei 225 jumped 1.03%, while the Topix Index gained 1.19%. The Japanese data showed that the country's economy grew at a slightly higher annualized rate than initially estimated, 2.2% in the first quarter, as compared to the median forecast of 2.1% growth. In Europe, stock markets rose on Monday as well as Trump dropped the threat of tariffs against Mexico, and weak U.S. jobs data fanned expectations that the Federal Reserve will cut interest rates soon. German DAX added 0.77%, France's CAC gained 0.34%, UK's FTSE was up 0.6%, as well as Italy's FTSE MIB. However, as the U.S.-China trade-off standoff remains unresolved ahead of a possible meeting between Trump and Chinese counterpart Xi Jinping at a summit at the Group of 20 later this month, investor optimism remains limited. Wall Street ended on a positive note on Monday amid positive geopolitical developments. The Dow Jones Industrial Average added 78.74 points, or 0.3%, to 26,062.68, marking its longest winning streak since May 2018. The S&P 500 gained 13.39 points, or 0.5%, to 2,886.83, while the Nasdaq Composite Index added 81.07 points, or 1.1%, to 7,823.17. In foreign exchange, the dollar recovered against the major rivals after dipping on Friday. Friday's data showed that the United States added only 75,000 new net positions in May, fewer than half the 180,000 the economists had been expecting. The pound was knocked by official data showing that the UK gross domestic product contracted 0.4% in April on a slump in manufacturing amid Brexit uncertainty. The GBP-USD pair dipped to lows around 1.2650 and finished the day marginally above this region. The Euro-US dollar was marginally lower on the day after a two-day rally late last week. The pair challenged the 1.13 figure but managed to close just above this threshold. The euro is now stuck between the 100 and 200 DMAs and remain in consolidation mode until it shows a break in either direction. In commodities, Brent failed to extend the recovery and encountered offers below the $64 level. As a result of profit-taking, prices slipped to $62 and closed at $62.34. There were some positive drivers that helped Brent to stay afloat initially, but concerns over the slowing global growth and oil demand took the prices lower at the end of the day. Baker Hughes on Friday reported that the number of active U.S. rigs drilling for oil fell by 11 to 789 last week, the lowest since February 2018. That followed a climb of 3 rigs last week. Meanwhile, the Saudi oil minister Khalid al-Falih said on Monday that his country and Russia are working on a bilateral basis, as well as with other oil-producing countries to prevent oil prices from plunging. Earlier, the Russian minister noted that there are big risks for oil overproduction and the possibility of prices declining. An assessment of the situation is needed so that oil producers can make a balanced decision at a meeting scheduled for July in Vienna on whether to extend oil cuts or keep prices stable, he added. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.